All right, for today's deep dive, we're looking at some pretty major seismic shifts happening in the global financial markets.
That's right.
We have a clear consensus from our sources, and the key idea is this. Risk is way up, and investors are shifting to defense.
Exactly. It's a total reevaluation. We're
Yeah.
talking about growing concerns over asset valuation and, macro instability. It demands a fundamentally different approach than what's worked for the last few years.
So let's start with the big alarm bell. Bond king Jeffrey Gundlach. He's issued a major warning that most financial assets, stocks, bonds, you name it, are just overvalued right now.
And his advice is prescriptive. It's not just a vague warning. He's saying reduce your U.S. market exposure and basically rethink that classic 60/40 portfolio.
Right, the 60% stock, 40% bond strategy. He's suggesting stocks should be less than 40% now.
Less than 40, yeah. It's not a small tweak.
No, that's a wholesale retreat.
It is, and it leads directly to these defensive indicators we're seeing. A big increase in cash holdings, for one.
Or just sitting on cash.
Sitting on cash, also a reduced allocation to gold, and a new look at some, very selective emerging markets.
And we saw the immediate market reactions, too. I mean, the FTSE 100 in the UK and the ASX 200 in Australia both dropped pretty sharply.
Yep, driven by those exact same fears over economic data and interest rates. It's all connected.
Okay, but this is where it gets, I think, really interesting. This surprising currency shift that's happening, the euro.
The euro.
Yeah.
It's emerging as a new safe haven. It's starting to replace the U.S. dollar and, the Japanese yen in that role.
Why is that happening now?
Well, the drivers are increased investment flowing into Europe, for one, but it's also coupled with these big concerns about the U.S. specifically, overvaluation in tech, and just uncertainty around U.S. monetary policy.
So let's connect Gundlach's warning specifically back to tech and AI.
Okay.
The risk there is a really sharp correction if these, astronomical expectations just aren't met.
And it's not an isolated thing. This isn't just a tech problem.
Yeah.
Reports show the market rout is intensifying. It's sweeping up everything from tech to crypto, even to gold.
And what about the broader U.S. market? Morgan Stanley's S&P 500 target update sort of confirms this, right?
It does. They're projecting that earnings per share might rise, but valuations remain, and this is their quote, higher than historical norms.
So what does that all mean?
It means investing in the U.S. now requires extreme selectivity. The days of just, buying the whole market are probably over for now.
And we're seeing the macro headwinds that are pushing this urgency.
We are. Japan and Switzerland both just reported a contraction in GDP.
Which is influenced by things like U.S. tariffs and lower tourism, right?
Exactly. And that global slowdown, that connects directly back to you, especially if you're in a sector like, say, diagnostics or molecular biology.
So?
Well, when the overall market sentiment shifts to defense and caution like this, capital investment tends to freeze up.
Okay, so that would directly impact your ability to get equipment.
Your procurement, your purchasing cycles for high-cost lab equipment, sequencers, long-term R&D projects, the entire supply chain feels it.
So the core takeaway here is pretty clear. The shift is away from just chasing trends and moving towards a much more meticulous, careful evaluation and diversifying.
And looking beyond those traditional safe harbors, the game has changed.
So we'll leave you with this, a final thought. Given the euro's rising appeal, what are the underlying structural economic changes happening in Europe that are making investors feel safer there than in the historically dominant U.S. market?
And maybe more importantly for your work, what new metrics should you be using to evaluate market entry or even just equipment investment in this kind of highly selective and, frankly, defensive environment? Something to consider as you map out the year ahead.